We have a good old-fashioned battle of the billionaires. Cathie Wood of ARK says that Bitcoin is going to $500,000 in 5 years, while Ray Dalio, who continues to flip-flop back and forth, says that regulators will absolutely kill Bitcoin if it becomes a success. In the words of Janet Jackson, who's right? Who's wrong? What have you done for me lately? Y'all know the song, right? Anyways, I'm going to take a look at the Bitcoin, Ethereum, Sol, and Matic charts, as well as all of the news right now. You don't want to miss it. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and gently caress with your pinky finger the like button, that little thumbs up. Use your pinky to hit the thumb. It's kind of like this. That's what you guys need to do. And you should subscribe to the channel. Why? A, because I'm amazing, handsome, and you want to watch me every single day. But B, because there's a financial incentive for doing it. And what is that financial incentive? $5,000. We're getting very close to 100,000 subscribers. And when we get there, I'm giving away 10 prizes of $500. Just subscribe to the channel, hit the link down below this video, and enter as many times as you want. Go ahead, enter like 1,000 times. I do not care. Smash that like, smash it. Smash it. So guys, there is so much happening. It's nice to see a revived and revitalized news cycle for Bitcoin and crypto because it seemed very dead for a while there during this summer. Everybody's out on vacation, enjoying their moment, free from their homes and trying to pretend that COVID didn't exist. You know how we did it all summer. You guys know. You guys know. So anyways, we're going to start with the news. We're going to dig in right now. There's so much to review. But first, I think probably the biggest thing, hopefully we'll have a video uploaded, but I'm not sure we'll get it in time. First thing we have here is senators demand cryptocurrency regulation guidance from SEC Chair Gary Gensler. SEC Chair Gary Gensler assured the Senate that the regulator is working overtime to create a set of rules to oversee the volatile cryptocurrency markets. Actually, what he did, if you listen to it, was he continued to hedge his bets, hem and haw, and say that basically we're nowhere closer to doing anything, but we're working on it. Now, really what bothered me here was the quotes that they said and the way that it seems they're approaching this. As it says here, the SEC chief noted the enormity of the task, telling Senator Catherine Cortez that the regulator could use a lot more people to evaluate the 6,000 novel projects and determine whether they all qualify as securities under U.S. law. Here was his quote. Currently, we just don't have enough investor protection in crypto finance issuance, trading, or lending. Frankly, at the time, it's more like the Wild West or the old world of buyer beware that existed before the securities laws were enacted. Now, the big problem for me here, which should be obvious, is that they're saying we don't have time to look at all 6,000 of these assets and then saying, and they all could be securities, which would lead you to believe that they're not going to look at each of them individually and that there may be some sweeping, heavy-handed regulation that comes in. And that is the last thing we want because each of these projects and coins, as much as they want to minimize it, are individual projects, individual companies that need to be vetted one by one to decide whether they are securities or not. Oh, and by the way, determining what is a security through the Howey test is an ancient practice that probably should not be applied to cryptocurrencies anyways. This is pretty disconcerting, to be honest. Listen, they can't kill crypto. They cannot kill Bitcoin. We know that. The Bitcoin network will go on as long as there's a computer left on the planet to keep mining and securing the network, but they can really make it difficult. And what's funny is they're trying to skin it as if they're trying to protect innovation, but everything that they do says, no, we're trying to crush it. We see it as a threat and we're going to send it all offshore. The United States is woefully far behind here. It's frankly embarrassing to see it at this level on the world stage. And what happens with the SEC is likely going to determine what happens with regulators around the world because, like it or not, they're up on the United States jockstrap, just all up, dangling from Gary Gensler's backside, waiting for some guidance from the almighty United States and their dumb ass regulators. We're behind but leading. That is not where we want the United States to be right now. Now, jumping, and what's crazy, honestly, I was about to move on. Gary Gensler is supposed to understand Bitcoin. He taught blockchain at MIT. He taught blockchain. He was a teacher. And you know what he said yesterday? Elizabeth Warren, oh my God, Elizabeth Warren, what's wrong with Elizabeth Warren? She used Ethereum gas fees as a reason that consumers should be protected. So stupid. Did you know that last week? She said, did you know that last week Ethereum gas fees went up to $500? First of all, like, if you don't like it, don't use it. Second of all, I didn't realize that Elizabeth Warren was aping into NFTs and degenning on yield farm DeFi platforms and knows about Ethereum gas fees. But the clear answer there is that she has no idea what's going on. She has no idea what's going on. Somebody gave her a soundbite. His response when she asked, how are those gas fees determined? He said, a user agreement with the exchange. He didn't say code. He didn't say math. He said a user agreement with the exchange. How woefully underinformed are these people that are attacking us? It's absolutely a joke. Someone Luke said here says Gensler has been corrupted. Gensler has been corrupted. Has he been corrupted now? Or just Gensler is corrupted? You guys don't realize. Listen, I viewed Gary Gensler as a net positive. He understood it. I figured we wouldn't get heavy-handed regulation. But Gary Gensler is a billionaire from Goldman Sachs. Not a billionaire, excuse me. Worth over $100 million. Has 9 figures. He made Goldman Sachs. And now the guy who preyed on the small guy, on the little people. Well, now he's here to protect us from ourselves, right? And that's not what's going to happen. But anyways, now you've heard my rant about the SEC and Elizabeth Warren. Go away, you old losers. Oh my God. Speaking of old losers, Ray Dalio says regulators will kill Bitcoin. Ray Dalio flip-flops more than my feet on the beach. What is this guy talking about? Ray Dalio used to hate Bitcoin. Then he came in as a huge proponent of Bitcoin, said he was putting up to 5-10% of his net worth into Bitcoin, which he has done. And now he's shitting on Bitcoin. He says regulation will kill Bitcoin if the top cryptocurrency becomes really successful. It already is. Shut up. Now, here we go. Let's read a few of his head-scratching quotes. I think maybe he's senile. I think at the end of the day, if it's really successful, they will kill it. They will try to kill it. And I think that they will kill it because they have ways of killing it. First of all, you're killing it with how many times you said killing it in that quote. You need to kill it with saying kill it. Here's what else he said. If you put cryptocurrencies, or let's say Bitcoin, in the historical perspective, there were so many things in the historical perspective that didn't have intrinsic value. Okay, bro, like, what are you talking about? While admitting that Bitcoin is an amazing accomplishment because it's already stood the test of time, Dalio noted that governments do not want it to succeed. This guy is absolutely all over the map. I have no idea what is going on with him, but he owns a ton of Bitcoin, supports Bitcoin. And in the article, I couldn't even find the place there. He also, saying it has no intrinsic value and that it's basically a cute investment. I don't understand. I see that my amazing producer, Mike, has pulled up my favorite scene from the Gary Gensler testimony. I don't know if you guys saw this, but going back to the regulation part, this entire Senate hearing yesterday was a mockery to the point where we had senators doing this.
Any disrespect to you? I followed your career. You've had quite a career in public service. You've made a lot of money on Wall Street. I respect that. I honor that. But
of course
as to the people and the companies that you regulate, as chairman of the SEC, do you consider yourself to be their daddy?
No.
Then why do you act like it?
I try to take the oath of office seriously that the SEC is set up to promote investor protection and facilitate capital formation and that which is in the middle.
But why do you impose your personal preferences?
All right. I mean, that's enough of that. Daddy? Is that you, Gary? A lot of us probably wish that he was our daddy because then we'd be getting paid on that family trust. You know what I'm saying? But daddy? I mean, what? These guys are looking for sound bites. They're looking for clout, and they're using any opportunity to obviously make a headline. And frankly, Kennedy just got a little airplay from me as a result of doing it. But guys, they're not taking this as seriously as they should. Obviously, it's a big joke, but whatever, daddy. On to the next billionaire. We have Ray Dalio here, obviously saying that he thinks they'll kill it. Here's the billionaire that we all love a little more today. I'm sure Dalio will be back in our good graces soon. But of course, Cathie Wood, the CEO of ARK, predicts 500,000 Bitcoin in 5 years, but also super bullish on Ethereum. I've also got her video. Let's see what she had to say at the SALT conference.
We believe that the price will be tenfold of where it is today. So instead of 45,000, over 500,000. Confidence in Ether has gone up dramatically as we've seen the beginning of this transition from proof of work to proof of stake. We'd still probably do 60% Bitcoin, 40% Ether.
I would vote for her. Cathie Wood for president, don't you think? And it's interesting. She's one of the first institutional investors who was interested in Bitcoin, but now is also saying, hey, we look at Ethereum too, 60-40. Very reasonable split, the same way that likely my portfolio will look as well. She points to the transition from proof of work to proof of stake, obviously, because we're seeing the deflationary aspects of Ethereum kick in. But there's a lot to like. There's a lot to like about her opinions here. And I agree. 5 years, $500,000. That's nothing. A 10x for Bitcoin. People talk about how crazy it would be for Bitcoin to be $500,000 because they get caught up in the number, right? How are we going to get from 50 to 500? That's 450,000. No, it's 10x. What did Bitcoin do from $3,800 to $65,000 in 1 year last year? A lot more than 10x. That's not a big deal for Bitcoin. It can easily happen when you consider the percentage gain and not the amount in dollars. Now let's take a look. That's a great comment. Someone just said, Cathie Wood is our mommy. We'd rather have Cathie Wood as our mommy than Gary Gensler, certainly as our daddy. And as somebody I saw, I don't know where the quote went, but my hairline, as high as it already is, would be a lot higher if Gary Gensler was, in fact, my daddy. Here we go. The Bitcoin chart, guys. Here we are in the daily pushing towards 48,000. If only there was somebody who had the balls to go out there and make videos and newsletters and take a personal position and share it because he really believed with conviction that this was the bottom. If only there was someone like that. Yeah, that was me, right? I tried to tell everybody. I try to be transparent, tell them exactly what I'm doing. Listen, hindsight is 2020. I was within dollars of stopping out on this trade. You guys know that. But everything was screaming bottom to me here. While there was a lot of panic, it looked like we were going up. We could still go down. Looked like we were going up. But for those who love it, here's the 50 MA crossing up the 200 MA. As I said, when it happens right with price, you usually get that push up. Both of these lines acting as support and price continuing up. I'm not in love with volume. I want to see more of it on the push up, but that's looking pretty good there on the daily chart. Just making sure we got everything going on over here. Now on the 4-hour chart, this was the trade. You guys know, you've seen it. My perfectly placed, I guess you could say, stop loss within $40 of price. My intention was actually to move it down a little bit lower. But hey, here we are. I've added a bit to the position now on the way up on the breakout. And now we are above, as you can see. For some reason, my computer keeps resetting my charts. You can see we're above this key level. We broke out from this channel that I was telling you about. 1, 2, 3 perfect touches. That Walmart fake out pump touched this channel to the dollar right there. To the dollar, right? Break here, resistance, breakout, retest to the dollar, retest of this previous demand as support. Everything here looking bullish. Let's move on. Since she mentioned Ethereum, we'll take a look at that too. Ethereum, Bitcoin not looking great, getting punished. I shouldn't say not looking great, but down today because it's getting punished by Bitcoin's move up. No surprises there. That's what we get. Let's look for a break of this blue line, but we should be targeting the top of this channel now that we flipped the EQ. Ethereum on USD looks just like Bitcoin, right? Bullish divergence, breaking out, retesting, heading up. The only question mark here, let's look. That's very close to having hidden bearish divergence. I wouldn't worry about it too much. But yeah, same kind of thing and lagging. So if Bitcoin cools off, expect Ethereum to catch up. Now let's go on. There's so much news about institutions. It is crazy town. Fidelity push for Bitcoin ETF approval in private SEC meeting. So we have giants like Fidelity basically pitching the SEC on the validity of a Bitcoin ETF, meaning that they also view clearly Bitcoin as a real asset, as its own asset class, and one that should be regulated wisely so that we can have an ETF. With reasonable regulation comes an ETF. We can't really have an ETF if they determine everything to be a security and come down heavy-handed. So it's just really, really bullish. Fidelity, listen, has been ahead of the curve with cryptocurrency for a long time. No surprise here. This is one of the biggest asset managers on the planet, and they are privately pitching the SEC for Bitcoin ETF. As I've said before, Gensler has tipped his hat and said we're more likely to see a Bitcoin futures ETF Approval. I had a long conversation with Raul Paul. It's on my channel on the podcast about what this meant. To him, it meant the same thing as an ETF getting approved, futures, whatever. It doesn't matter. That would allow this wall of institutional money to come in. So maybe we'll see these ETFs denied and then ETF futures approved. Next, how billionaire Steve Cohen learned to love cryptocurrencies. Well, he has this very smart and savvy and intelligent son. If you don't know who Steve Cohen is, he's worth about 11 billion. He's the founder of Point72 Asset Manager and the owner of the exceptionally trash New York Mets. Trash New York Mets. I said it. New York Mets are trash. Don't let Anthony Scaramucci hear me say that. He is a huge Mets fan and friend. But yes, Stevie Cohen, he had a lot of interesting things to say about it. His son is a crypto maniac, and here's what he said. He really convinced me that this was something I needed to do. And then down, here's really what he had to say. And he said it to Anthony Scaramucci. Ooh, I just read that. Once I decided there were opportunities and I thought this could be a space like the internet, it could be incredibly transformational. I wasn't going to miss this. Generating Alpha in Markets and Baseball was the title of that talk. He's not going to miss out. He's investing billions of dollars into the crypto space, guys. These dudes are pouring in and they get it, even though the Mets suck. Coinbase's junk bonds show crypto really is going mainstream. Well, we all obviously have seen MicroStrategy raise the junkiest of junk bonds to be able to buy more Bitcoin, offering 0% on their junk bonds. But now we saw the announcement that Coinbase was raising $1.5 billion in a debt offering. Well, they had $7 billion of interest in a day and decided to raise it to $2 billion. And what's interesting here is this is an indication that debt investors, which is a huge industry, people love buying up cheap debt, right? The strong demand is clearly a big endorsement by debt investors. This means it's not just VCs and, sort of the outliers that are looking at this space. This was an opportunity that institutional investors that are not in cryptocurrency saw to buy up reliable debt in a company that they think will do well. Huge, huge, huge. Jump Trading no longer wants to be secretive about its multi-billion-dollar crypto operation. If you guys don't know about Jump Trading, they're one of the biggest institutions on Wall Street, but they're super, super secretive. People don't really even know who their founders are. The guys are basically ghosts. They've disappeared. These are the guys who sort of pioneered high-frequency trading, getting that landline that gets you that split millisecond faster internet, digging tunnels under channels to make it happen. These guys are epic chads when it comes to being ahead of the curve with trading. And they've been in crypto, they said here, for 6 years already and have never mentioned it once. They have billions in crypto. My favorite part of this story, I'm probably going to butcher his name, Kanav Kariya, who they hired as an intern when he was in college. He's only 25 now, to build out their cryptocurrency infrastructure. They gave him the job as the crypto unit head. He's 25 years old and was the engineer that was building it as an unpaid intern. Now this guy is running the company, overseeing billions of dollars. Once again, another example of the young people replacing the old and huge money coming into cryptocurrency. Now let's talk about Solana. Solana mainnet back online after day in the dark. Engineers succeeded in restoring service across Solana's network of node runners after nearly 20 hours in the dark. I went to move some Solana yesterday from Binance US and it wouldn't let me whitelist and addressed. I was infuriated. I didn't understand why I kept getting this error. Well, that's because Solana was down. Horrible. And listen, this is just an indication. It's reminding us once again, I wrote about this in the newsletter down, which you can check out by clicking down below. We're really early, right? And even the most reliable, exciting networks, they can go down. And so there's always risk when you're investing in a nascent space and you're early that there's going to be problems like this. The good news is that they came back online. The bad news is it's a little sketchy. That bots were able to spam the network and that effectively the network was not able to run. They had to go back and fix a patch, basically retroactively to older transactions to make it come back online. It took 20 hours. And what the problem is here is if there's, a layer one goes down, this is the core blockchain underneath. Well, everything built on it also goes down for that time. Listen, I think that it makes the network stronger when they find these exploits and when they fix them, but it does remind us that we have to be really, really, really careful what we invest in. I have no problem with Solana. I'm just saying this should be an eye-opener for everyone. Let's take a look at the Solana chart. Didn't react that badly, honestly. We had 1, 2, 3, 4, 5 days already of downward action. No surprises here. This looks like a blow off top. We also had this looked like a blow off top already before, right? Huge volume, shooting star candle, continued up. We have the shooting star candle on high volume, major increase in volume. The highest volume was 2 candles below that. And now we're seeing this drop. This was the price action when it was down. Pretty crazy that it only really dropped from 169 to a low of 142 when the network was completely down for 20 hours. I would have thought people would have panic sold. Just shows just how bullish people are on this coin and on this market in general when news like that does not hurt it too bad. Listen, I'm not I have no idea if it'll come back again. It's already tested, but if you're still bullish on Solana, obviously you just want to buy dip. So look for maybe 131. On to more altcoin news. Yet again, institutions, Big Four accounting firm EY, that's Ernst & Young for the old people here, joins forces with Polygon to scale Ethereum. This is a really, really interesting story. I have the tweets actually here from Polygon, which explains it a little better. They said, we have started collaboration with EY, a global professional services and technology firm, on building Ethereum scaling and enterprise solutions. So what happened here basically, and by the way, Ernst & Young, like Fidelity, is another one that was very ahead of the curve with cryptocurrency. They hired ahead of cryptocurrency many, many years ago and have been building on Ethereum and trying to use it to settle for their clients, use it in accounting. They really have tried very hard, and they created this project called Nightfall, right? They talk about right here. But Nightfall's wider adoption was hindered by congestion and high gas fees on the Ethereum mainnet. Basically, they built this thing and then they didn't realize Ethereum would be so problematic, would become so congested, and became unable to use. So what they did is they partnered with Polygon, or Matic, I'd still call it Matic, with Polygon to make Polygon Nightfall with rollups. They're building that out now. So basically, this huge firm, Ernst & Young, is using Matic to deploy the product they had already built in a more efficient and faster manner. Absolutely huge. Let's take a look at the Matic chart. Not reacting hugely to this news yet. Maybe it hasn't gotten out there. Maybe people just don't understand in this space how big Ernst & Young is. But this is a trade that I actually shared in the newsletter. I hope you guys read it. You've had 4 hours already. I put it out at 6 o'clock this morning. I'm loving this spot right here for Matic. News aside, right? This is a key resistance that was flipped to support. You could argue this was an inverse head and shoulders. And now we've been ranging between $1.70, basically hit $1.80, and this $1.25 level. But what I like here is how many times, 1, 2, 3, 4, 5 times prices drop below that level, and every one of those candles has closed above, and now it looks like we may be making a push up. This is the path I'm looking for, but for now I would say the target's 171. Regardless, you should be bullish on Matic. They're making huge partnerships, doing huge things, and we're arguably the first layer 2 to really start gaining attention as Ethereum started to become problematic. Christie's lists rare CryptoPunk Bored Ape in major NFT auction. Reading this article was like, I mean, I'm in this space and I still found it like, what the hell are we talking about here? But demand for NFT style avatars is driving collector interest, says Christie's. Now, these are the avatars, JPEGs, NFTs that will probably retain their value. The ones that are being sold at the very highest end, they're old, they're scarce, and there's a lot of value. But I mean, when you read about this, it's like the auction will also include Bored Ape Yacht Club 8746, a cheetah furred ape with a halo and laser eyes, and Larva Labs Meebit, a skull-headed figurine with Lego-like limbs. Bruh, I don't know. I'm 44. I don't get it. I feel like I could make these. It's also how I feel when I hear a song on the radio. I'm like, I can make that in 3 minutes. I'm not hating, man. I love this. It's great for the space that there's this much interest. But these are on sale now if you're interested at Christie's. There was another quote here I'm trying to find, but some of these sold, a package of these of Bored Apes sold for, I believe, $24 million recently, 10 of them. So this is no joke. I mean, last week, Rival Auction House Sotheby's sold a lot of 100, I don't know that it was 10, a lot of 100 of them, Bored Ape Yacht Club NFTs for $24.4 million, $240,000 each. A lot of money. So interesting to see, obviously, the huge volume decrease in NFTs. I think the bottom end of this market has fallen out, but the top end still running hard. Guys, that was a longer stream, about 25 minutes. I had a lot to say, and I didn't realize that I would rant about Gary Gensler and Elizabeth Warren in the SEC. But how can you not rant about Gary Gensler and Elizabeth Warren in the SEC? My God. What are we doing here? What are we doing? But it shows you that everything now is effectively fake news for a soundbite, right? These people probably have not Gensler. I mean, Gensler's at least in the know. He has people working for him at the SEC. But these politicians that talk about cryptocurrency, like literally, you know, they have like some intern who goes and finds them like 3 fun facts about cryptocurrency that you can use to shit on crypto heads, right? And they go and they take their bullet points and they just go over and over again. Bitcoin uses more power than the entire country of Pakistan. What do you have to say about that? Well, I have to say that they're using different power that's wasted and would not have otherwise been used. And it's primarily renewables and not coal. But Pakistan, bro. Pakistan. Do you even know Pakistan? It's so infuriating. It's so annoying. And I mean, let's go back. Elizabeth Warren is concerned with Ethereum gas fees. That's her argument for protecting consumers from the fees that are transparent and they show you exactly the fee and you choose the speed and gas that you want to pay when you do the transaction. That's what we need to protect consumers from. We don't need to protect consumers from predatory government agencies and predatory loans and credit card companies that offer 25% APR annual interest. And we just let credit card companies do that. But Ethereum fees. Ethereum fees, the silent killer. ETH fees. Do you even know that there's a gas leak on ETH? It's a gas leak. It's killing everyone with the fees. Okay, guys. That was fun. That was fun. I had a good time. I hope that all of you also had a good time. I'm going to now calm down and remind you that I have a giveaway, $5,000 down in the thing. But more importantly, today, yeah, exactly. Dalton said she wants, God, you guys are commenting so fast. She wants your monkey JPEGs. Elizabeth Warren is coming for your Bored Ape. Defend the apes at all costs. Defend the apes at all costs. Guys, that is it for today. I do have a 1:30 p.m. EDT stream today. The first stream I ever started doing. It's my baby. Every Wednesday at 1:30, I take chart requests from my beloved newsletter subscribers. Yes, they pay $15 a month to get a newsletter 5 days a week, and I am their little charging slave and take a look at 25 or 30 charts for them every single week on the request. You can sign up for that down below. It's for the paid members. There's also the free version, of course. Guys, that is all for today. I've had a great time ranting with you. These people piss me off. I'm sorry. They just absolutely piss me off. But you guys don't. I'm glad you're here. I love you, and I'll see you at 1:30. Peace.
That's dope.